10 seconds. Market on open imbalance. S&P 500 sell side 9 million, Nasdaq 100 sell side 9 million, Dow 30 sell side 67 million, Mag 7 sell side 6 million. BlackRock shares jumping a spot 3% to their biggest gain since April 2025. PayPal shares gaining 16% at the market open, which is their most on record. US listed shares of SK Hynix dropping 9% following a surge of 27% in the last session. In 10 minutes time now, at 9:45 a.m. Eastern Time, we get the Bank of Canada rate decision. Forecasts remain unchanged at 2.25%. We also get the Bank of Canada rate statement and their monetary policy report. ASML now are raising gains, trading spot 5% lower in Amsterdam trading. BlackRock shares gaining 7.7% after a higher second quarter profit. Again, also PayPal shares up 15.5% after reports that Stripe and Advent are offered to buy the company for more than $53 billion. So we're now 5 minutes away from 9:45 a.m. Eastern Time, where we get the Bank of Canada rate decision, where the forecasts are expected to remain unchanged at 2.25%. We also get the Bank of Canada rate statement and their monetary policy report. US listed shares of Alibaba rise 5.7% after a report that the company's Qwen AI is to be integrated into Apple's intelligence in China.
Damn, of course my mic was muted. So we got about 3 more minutes until the opening range is formed, and it's...
According to Jimian, ByteDance and ZTE are to unveil their Dubao AI smartphones.
I mean, we could see a bounce here on the we could see a bounce on right here at the Qs, on the Qs here. It's we have a dark pool order that's literally resting on top of a gamma level, so we'll see if we'll see what happens here. I mean, I have this subscription until I think until next month. It just renewed, so I mean, I still have it.
1 minute remaining for the Bank of Canada rate decision. Again, widely expected to remain unchanged at 2.25%.
So I'll give it like a month. So I decided to, I mean, since I have it for 1 more month at least, try to utilize it like this and see if, because when it's having it on the side is easily I can easily ignore it. But if I have it as a full page, I'm actually looking at like the levels and stuff like that. I'm looking at the option flow on a separate page.
10 seconds.
All right. I really wonder. I wonder what's up with that. If we see a bounce here, this thing can we see a recovery?
So looking to the Bank of Canada statement now, they see 2026 growth at spot 7%, which is down from the 1.2%, which was seen in the April monetary policy report. They see 1.8% growth next year, up from 1.6% previously, and 1.8% in 2028, up from 1.7% previously.
All right, so I enter in
Q2
long.
GDP seen at 2.5%, which is up from 1.5% in April and 1.5% in Q3. The Bank of Canada say inflation is to average 2.5% this year, which is up from the 2.3% seen in April, 2% in 2027, down from the 2.1% seen previously, and 2.1% in 2028, which is up from the 2% seen previously. The Bank of Canada note that the Q2 output gap is estimated to be in the range of -1.5% to -0.5%, unchanged from the April monetary policy report. They say potential output growth in 2026 seen at 1.1%, down from 1.2% in April. They note that nominal neutral interest rate is assumed to be at the midpoint estimate of the 2.25 to 3.25% range, again unchanged from April. NPR assumes the price of Brent will decline to around $70 by the end of 2027. The outlook for oil prices remains highly uncertain, they do note. NPR assumes the USMCA trade deal will remain in place with the annual reviews, assuming shipping through the Strait of Hormuz gradually returns to normal. So again, the Bank of Canada hold their overnight interest rate at 2.25% as expected. They note that the current policy rate is appropriate to sustain the recovery. Bank of Canada's Macklem, in the text for the upcoming press conference as well, says that inflation is poised to ease gradually, provided that global oil prices decline, again in their prepared remarks. They say that near-term inflation expectations are sensitive to changes in gasoline prices, but longer-term inflation expectations remain well anchored. War-related cost pressures still working into prices. So saying there that war-related cost pressures are still working their way through some consumer prices, but are being offset by downward pressure on other prices from continued economic slack. Canadian dollar flat against the US dollar at the moment following the Bank of Canada rate decision and the statement release.
Hey, what's up, Investor Z? For the life of me, I'm trying to get the long to work, but
So we've posted the Bank of Canada monetary policy report alongside the rate statement and Macklem's press conference opening statement. The link to those three are on the feed for those interested. So just noting in the statement here that the Bank of Canada drops their reference to consecutive hikes.
okay. Well,
So in 10 minutes time now at 10 a.m. Eastern time, we're expecting the second day of testimony from Fed's Chair Warsh, who today is testifying before the Senate Banking Committee on the Federal Reserve's semi-annual monetary policy report. So a text is expected, of course, but it'll be a repeat of the opening statement that Warsh gave yesterday. But there will be a Q&A following this where we'll keep you posted with any new comments from Fed's Warsh.
I mean, we could see a big recovery here. We do have the liquidity for it. We have the liquidity for a big recovery. Or we have the
So in
liquidity
the
for
statement, the Bank of Canada
I drop
also
right back
drops
to the
references
break-even.
to cutting rates as well.
Alright, so I'm gonna add on.
So the Bank of Canada in the statement today dropped their reference to consecutive hikes as well as the reference to rate cuts as well.
If this candle holds, I want to take the break it at the high of that candle if it holds.
So the Canadian dollar now weakening slightly following the rate decision. CAD JPY down around spot 1%. And the loonie up around spot 0.5%, so close to flat.
All right, I want to take the break of that candle. Probably readjust my stop a little bit. Okay, let's see if we can get a continuation here.
Alibaba ADRs extend gains to session highs of 7.2%.
I mean, we have the liquidity for a big recovery here. You got to think that all these stops right here, this trend line coming down. It's a very steep trend line too. So we have the liquidity for a big
Flying once
reversal.
again, this time to the Senate Banking Committee on the Federal Reserve's semi-annual monetary policy report. There'll be no new text from Fed Chair Walsh.
Okay, so I got half of my first position off with that little pop right there. Looks like the bears are trying to sell into this bearish imbalance right here. I should be mindful of that, but I think the bears get this up. Man, well, that 15-minute candle it is still bearish. I mean, it is being bought back up, but we did see a break of structure.
So just seeing on the wires here, flagging a Trump headline saying that Iran called a while ago and they want to make a deal.
Man, at this point, nobody wants to hear that shit no more, man. I mean, this 15-minute candle did break structure to the downside. So
just to clarify on this headline, so it did coincide with a move to the downside in WTI oil, a little bit of a move to the upside in the US index market as well. But the newswire that posted this headline has flagged it as a repeat. In looking into it, though, we cannot actually see a duplicate of this headline, so it's unclear whether this is a new headline or not.
It's unclear. Man, this candle feels like a Trump tweet is coming, man. This feels like a Trump tweet candle right here. Hopefully that's not the case. Things feeling kind of heavy and buyers are buying this shit, so okay. I mean, we could see some resistance at 825, 840. Ooh, look at that. Okay.
So Reuters putting down ignore this alert in error with regards to that last Trump headline.
Wow. 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 Nobody can convince me that this is not a game. You speak of the devil shall come, right? I was like, dude, it feels like a Trump candle, and then all of a sudden we get a false Trump news alert. Feels heavy, but we'll see.
And so we are shortly expecting day 2 of testimony from Fed Chair Walsh. The Senate committee advances BLS nominee Matsumoto to the floor vote.
All right. Like I said, we could see some resistance at 825, 840. We could see some resistance there. All right, there we go, man. There we go, baby. There we go, baby. There we go, baby. There we go, baby. There we go. There we go. We got that stop run. All we're doing is using the liquidity that the bears. There we go, baby. Keep on pushing. I got my trailer. Oh yeah, we're back at the orb low here. I just realized that. We're back at the orb low, so we could see some turbulence here. All right, so we got half of the add-in. We got half of that. All right, so we got that target filled. Okay. All right, can we see a continuation here? If we get a pullback to about 810-ish, I'll look for a re-entry long if it pulls back to that area around 810. All right, there we go, baby. There we go. Both of our stops are in profit. Got one trailing as it goes higher. Okay. All right, so we're just in one. Our stop is literally underneath that low. So regardless of what happens, this trade is going to be profitable. Nice trade, nice trade. Let's see if we can get our final target hit. So basically this whole trade, I have this whole thing automated now. I don't have to touch it. All I have to do is manage it, and everything else just takes care of itself. And I think, especially when you're trading the Nasdaq, just having one less thing that you have to worry about makes trading this thing easier. It would have been nice if I want to make sure that I cancel this buy order up here. I had that buy order resting up there just in case I had to limit back in. But okay. All right, so I'm out of that trade. Really great trade. keep hammering at the damn Nasdaq. All right. So the question is, do we see the break? Do we see the break underneath the low, the orb low? The orb low is at 832. Do we see the market break back underneath the orb here? Do we see the market bounce at the orb? What should we expect here? Like I said, anything around 810, if we get a reaction. Actually, I'm gonna put my resting buy order back up on top of the this chart so I can be ready for a pullback. I've been trapping all damn night in a mountain. And I'm Montana, she twerk on the top of my phantom. Twerk, twerk. All right. Well, it would have been nice if the Nasdaq would have filled my profit target. I mean, it literally came back and stopped me out at the tick, and then actually continued to trade higher here. So it did look like the market did sweep the orb low. It swept the orb low, and then we saw that move higher. We're almost at the 50% of the orb. I want to see what the market does here. I wouldn't mind taking a short back down if we get the reaction that I'm looking for at the orb at the 50%, because we did see the market break structure. We did see the market bounce at the bottom of the orb. I think that 50% could be a hot spot for sellers and a great spot for bulls to take their profits. So I'm going to try. So we got about 20 minutes until the initial balance forms. Interesting. Well, we'll see if this thing pops to the 50% here, because the same way that it came, the same way that it went up, the same way that it'll go down. We have all this trend line liquidity for the market to use for the move back down. So we'll see what happens here. We'll see what happens when the market gets to the 50%. Or I guess we could wait for the break of the trend line and sell the retest. Yeah, a bunch of bears just got trapped. A bunch of bears are now trapped underneath this trend line. So we'll see. We'll see if the bears are going to hold it or if we're going to see a pop. The 50% is around 905. So somewhere in this area right here. Yeah, you can tell that's most likely going to be a false break, because we're still even though this is a red candle, is a red bullish candle, and this 15-minute is still trading above the body of this candle. So we'll see. I would say that the market is going to trap bears underneath this trend line. But I guess we'll see. Okay. I see a bullish pin bar. I'm gonna buy this in this area if this thing pops right back up. Mm. Okay. Now let me see if I can add into this position somewhere. I'll probably add back in at 810. Or initially I said that I was going to add to the position because if I saw the break of that candle. I saw the break of that candle. Maybe get this thing to pop higher here.
Axios reporter on X, citing a senior US official, says the talks between the US, Israel, and Lebanon have concluded after 2 days of fruitful and positive discussions in Rome. We have agreed on the structure and guidelines of the regional pilot process, which will be finalized and implemented in the coming days. We will now move to expanded technical talks, which will focus on implementing all areas of the framework agreement with the aim of reaching a comprehensive agreement between Israel and Lebanon. So again, this is an Axios reporter on X, citing a senior US official. So keep in mind, Fed Chairman Walsh currently repeating his testimony statement to the Senate committee now.
Mm. Curb your enthusiasm. Okay. Mm. All right, man. Okay. All right, I'm looking for the breakout here. That's why I keep adding to the breaks, but it just keeps pulling back. I'm looking for the breakout.
In 10 minutes time now, at the bottom of the hour, we see the release of the weekly EIA inventories numbers.
Okay.
Crude oil inventories, the forecast is a draw of 1.824 million on the prior build of 2.998 million. The range sees a build of 2 million to a draw of 3.648 million expected. Gasoline inventories forecast a draw of 2 million on the prior draw of 1.904 million, and distillate inventories forecast a draw of 1.85 million on the prior draw of 4.98 million. Crude Cushing inventories, the prior was a draw of 0.052 million.
Well, excuse me. The market's going to short, I guess. I guess I should just get in with the shorts, right? I guess I'm gonna try for the breaker structure at these lows. Not 100% confident, but the market is pretty bullish. I mean, bearish. So, if we do see a pop, I am willing to add into it a little bit. We see a pop back up, or to scale into it. Okay. So we're seeing the break underneath that lows. It kind of sucked because I was looking for a specific pattern at this trend line right here. I guess it was a micro. I guess it was micro, I guess. I was looking for something different, but all right. So we got half the position off here. Half of the position is off, but we did run into some support though. So I'm gonna be very cautious about this area. I might actually start trailing a little bit early. So I don't want this to pop back up because we did just pop into some support.
Fed's Walsh says, I think any new leader should tap the best minds they can find. So that's Fed Chairman Walsh currently answering questions from the Senate panel. Again, we do have the live video on the feed and the calendar for those interested.
All right, well, there we go, baby. There we go. Great. Great trade. It is crazy because, like I said, I was not 100% confident in that move, but we got the breaker structure of that low. We got the trend line.
So we are seeing a leg down in the S&P 500 pairing earlier gains. We're still up 0.2%.
It would have been nice if we took the trade up here at that trend line, but okay. Well, I guess we'll see here. Guess we'll see.
Fed's Williams says the move up in the medium-term inflation expectations in the New York Fed survey is not flashing a warning sign. Says forward guidance is not appropriate at this point, and that the FOMC are to keep giving perspectives on the economy. So this is Fed's Williams speaking to reporters following his speech in New York. Brings us now 5 minutes away from the bottom of the hour, where we're expecting the weekly EIA inventories data. Fed's Chair Walsh first says the recent inflation data is an imperfect gauge of underlying inflation. Any central bank is happy when data goes in the right direction, though.
I'm going to take a little... This is a very...
So again, that's Fed's Walsh saying that my view is that these inflation data metrics are an imperfect measures. Again, less than 5 minutes now to the bottom of the hour, where we get the weekly inventories numbers. Crude oil inventories forecast a draw of 1.824 million on the prior build of 2.998 million. The range sees a build of 2 million to a draw of 3.648 million. Gasoline inventories forecast a draw of 2 million on the prior draw of 1.904 million. Distillate inventories forecast a draw of 2 million on the prior draw of 4.98 million. And crude Cushing inventories, the prior was a draw of 0.052 million.
Yeah, so this is a very aggressive trade. I kind of took the
Keep in mind, yesterday we saw the release of the private API stock change numbers. Crude oil saw a draw of 0.564 million, which was compared to the expected draw of 2.7 million.
We'll see if it holds here. So far, so good. But this is a very aggressive trade. But you guys know that I will always trade at previous areas of support and resistance. I'll take chances because I guess how I feel about this is, I mean, if you're going to trade anywhere, why not trade at support, previous support or resistance? Why not? You can get lucky.
Fed's Walsh says, in the near term, I think that AI investment is good for jobs.
But so far so good. I'm not gonna add into this. I'm just gonna let this single position ride. Just gonna let just this one ride here. We're getting the bounce, but I'm pretty sure the bears they'll pop up somewhere. They'll pop up somewhere, so I don't know where. All right. So looks like we made a good decision here. We should be coming up to our first target pretty soon. A couple more points, and we'll get our first half of the position off.
Fed's Walsh says, in the long term, I believe AI will help wages and employment. Walsh says, in between though, AI will cause disruption.
Yeah, AI is definitely disrupting a lot of things already. I missed that message, Investor Z. Congratulations. Are you in a
1 minute remaining. I'll lead with the EIA crude oil inventories.
Are you close to a payout? All right. We got about 30 seconds. We got 30 seconds until the new initial balance is formed, and we got half of the position off. So that's pretty good.
Ten seconds.
All right, so the new initial balance has been formed. This should update. All right, so that's the new
A
initial
draw
balance.
of 1.692 million. That's a draw of 1.692 million compared to the expected draw of 1.824 million. Gasoline inventories, a draw of 1.533 million. A draw of 1.533 million, higher than the expected draw of 2 million. Distillate inventories, a build of 4.556 million. That's a build of 4.556 million compared to the expected draw of 1.85 million. And crude Cushing inventories, a build of 0.43 million. A build of 0.43 million.
Okay, so I think I got my profit target. Yeah, okay, so it should be trailing right now. Should be trailing.
We have posted the US EIA weekly petroleum status report on the feed for those interested.
All right, so good trade, good follow-up trade here.
The Department of Energy note the US SPR draw 2.985 million, now at 316.504 million barrels. Iran's top negotiator Galabaf is to release a statement on the war and recent events. And so in a statement, Iran's parliamentary speaker Galabaf says in a few hours he's going to release a statement on the war and recent events. The Information reports that Apple is hunting for AI chip acquisitions. So the information adds that Apple's in-house M2 Ultra chips have not proven sufficient for running advanced AI workloads, forcing a reliance on NVIDIA. The information notes that Apple has talked with bankers about possible deals when it comes to AI chip acquisitions.
Okay. I'm gonna break out of this.
So Apple has approached chip startups to gauge interest.
All right, so I entered in long. We got a break of this candle. So I'm kind of confident about going long at these lows now, since the new initial balance, since the new structure has formed. We could see a breakout here. I would have preferred to have gotten in closer to those lows, because 720, 718 could, there it goes. 720 could be resistance. 720, 730-ish.
The article by the information is now on the feed for those interested regarding Apple.
Okay.
Israel's Hayom News says that Israel's PM Netanyahu will fly to the US on Sunday and meet with Trump on Monday. This was reported by Israeli Channel 12 yesterday that Netanyahu would meet with Trump in Washington on Monday. Brings us now 10 minutes away from the Bank of Canada press conference following their rate decision with Bank of Canada's Governor Macklem. We do have a live video for this. It's on the calendar. We'll put it on the feed as well.
Okay. I got stopped out of that one. I mean, I highly doubt that the market breaks that low. Okay. Well, if my power goes out, what time is it? 9:30. I'll restart the stream if my power goes out. The weather maker forgot that this is Texas, and we've been getting flash flood warnings. I mean, seems like different parts of Texas has been flooding, which is so interesting because we don't have resting bodies of water here for real. I think the only one we got is in Corpus Christi, I think, in Galveston, I believe.
The Nasdaq 100 extends declines to session lows, down 0.5%.
We're getting all these storms. Okay. So we got the breaker structure down. Man, man, it's just so hard to trust the freaking bears here. Just so hard to trust them.
The euro pound drops below 0.85. That's the first time since June of 2025.
Okay. All right, we'll see what happens at this initial balance low here. We'll see what happens. All right, so I'm gonna take another. I'm gonna set a limit down there. Another area of structure. Set a limit down there and see what we get.
In 5 minutes time now at 10:45 a.m. Eastern Time, we get the Bank of Canada press conference with their Governor Macklem following the rate decision.
Actually, let's look at. Okay. So we did run through that. We are at this gamma level. We are at that that dark pool. Would this suggest that we still have some room to go? Is the market trying to reach for this dark pool level right here on the Qs? I mean, it does make sense. This is where the market broke higher here.
A cable extending. Last up, spot 0.52%, its highest since June 15th.
All right. We were at this dark pool level right here, so.
The Fed's Chair Walsh says, I have been asking for access to a range of new AI models.
Okay. All right, so we're in We'll see what happens here. We'll see what happens. I'm trading at prior structure. This is another aggressive trade.
Chair Walsh says we see AI impact on demand more quickly than on supply. Fed's Chair Walsh says a one-time change in prices isn't necessarily inflationary.
Okay, so we are seeing that bounce at prior structure. We'll see how far this thing can bounce. I mean, we do have that range right here, so right at the initial balance low. We'll see.
So we are shortly expecting the start of the Bank of Canada press conference with Governor Macklem. The live video is on the feed for those interested.
There is a trend line coming down too. It has to break that trend
Fed's
line.
Chair Walsh says whether AI is inflationary or not will be up to the Fed.
All right, so we got half of the position off. Right, got half of the position off. It's the market is reacting at a trend line that I have drawn on my tick charts. For whatever reason, well, the minute chart is too. Actually, let me see if I can go down probably to a 30-second chart, maybe. Maybe we can see it
Fed's
there.
Chair Walsh says wages have moved up at a reasonable pace. The timing of when wages will move up more from productivity gains is a puzzle.
So there is a trend line, but maybe it's a 15-second, maybe. Yeah. 10-second. It's reacting at this trend line. There it is. All right, let me just go back to the minute chart. Okay, so yeah, so it was reacting at that trend line. Looks like we could see a pop above it. Man, should I be so bold to add to this? Let me add to it. Let me see if I can get, if they'll let me back. Let me get into this. Another aggressive trade. I'm gonna add at that trend line. I'm gonna add at the trend line. I'm not gonna chase it. I'm not gonna chase it. I'm just gonna see if they'll pull back and limit me in for the best entry.
Fed's Chair Walsh says the AI price surge is real. I don't want to be dismissive.
All right, so I gotta. Okay. All right. So we basically got the first position. That's trailing. You got a bulk of the position off. So now all we have to do is manage the second, the add-on trade, the add-on portion to the trade.
Fed's Chair War says business capital investment is contributing massively to GDP, and I guess that trend continues.
All right, so we got the last piece of this position trailing. The last piece of it trailing. Oh shit, speaking of a rebuild, my TPT account actually rebuilds in 2 days. How you doing this morning, Alfred? All right. Is it the 50K with the 50% off, or is it just a regular with the normal discount? All right, so we got that first. We got all the pieces off on that one. Everything hit full TP, which is great. We are breaking back in. All right, so half of the position on the second. All right, let's see how far this thing can go. So now we're back inside of the initial balance. We're back inside the range. All right, so it looks like the bears are trying to come in at the low, and they're trying to short it. We'll see what we get here. We'll see. Now let me cancel these orders. This is probably my last trade today. This will be my last trade. To assess damages on the property. Huh? It looks like the bears are trying to short it, but as you can see, there's a small little trend line here. It's a small trend line right there. Oops. We'll see if the bulls will pop back above that trend line. I mean, I guess with a trend line break, a structure break, it's highly unlikely for it to happen. Shit, we saw what happened to the first trend line break going up here. Let me delete this. Well, yeah. We saw what happened at the first trend line break. I was trying to be cute with the entry, and this thing went without me. So that sucked, but you know, we made up for it though. All right, so yeah, if you can get it
Fed's
close,
Chair Wall says, I think productivity will be structurally disinflationary.
if we can get back above this thing. Shit, you know what? I mean, I guess instead of, we can hear from, you know, the guy himself. So let's see if we can find the feed. BOC conference.
I do. I believe everything technology touches ultimately gets cheaper. Your background, I think, would be consistent with that. What are going to be the effect on the labor markets in years 2 through 5? It's a fair question. The way I would frame it to you on college graduates, if you're a new college graduate, AI is probably native to you. You've been playing with AI effectively since your high school years. I feel as though you likely have the skills and the intuitions the same way that people of my generation or younger were native to the internet. If you've already been in the workforce for a while, and you're a little resistant to change,
moving forward,
that's where the
Alfred,
encouragement needs to be to think about how these skills can make you more productive.
I'm just
These
going to
are
get
fair
the
questions. I don't have
100Ks.
easy answers, but I do have a
Well,
task force that's going to be thinking about
we
it.
have to work together on, because if we hit this,
I'm just going to get the 100Ks
bump, and I
on
think it's
all
gonna come,
accounts because
we gotta collaborate. Now, Senator Reid,
I don't want to make $9,000 and the
50Ks.
50Ks.
Mythos is already
Sometimes there's just days where the market is
because
just
these models are coming out so
insufferable, and you
quickly,
just
they
need that
pose
extra
such
drawdown.
security risks.
And all it really
I
takes is
think
one
it's
day to
incumbent,
kind of
because
ruin
of the risk it
everything.
provides to our financial system, that at some point you
Being able to trade the size that I want to trade.
now. I think personally, I believe
Because
we need
the
some
size that I
level
want to trade on a
of
50K would
mandatory
be,
testing
if I
pre-release
if I
because
lose,
of the potentially
it's
draconian and dramatic effects.
a big portion of the
Now,
account.
How long?
But
Who's
with
on
the
that panel
100K,
is critical. But what do you think
All I
about
gotta do is just
pre-testing
trade
release
a little bit
regime
more,
going forward? More than just the voluntary.
and I guess at the end
willingness
of it, I
company to come
can get a
forward.
bigger payout. So I guess
So
that's
two
like the
things
trade-off for
first.
you.
These models
so,
are in their capabilities are growing at an exponential rate. In technology, we would say
Looks like the bulls are
Moore's
holding
law.
so far.
It wasn't long ago people sitting
like
in
they're
my
holding so
position
far. The
thought
bears
that
are
the
trying
U.S. was a
to,
time of secular stagnation. All the good
Trying
stuff had
to
been invented.
sell at that
Boy,
21
that
EMA
seems
right
awfully
there, so.
anachronistic. We're moving fast. So what can we do? I don't have, as it currently structured, decision rights as to who has access. But I do have a bully pulpit, as you mentioned, and I'm unafraid to share my views with the Treasury Secretary and others. The cutting edge is moving very quickly. Key institutions are vulnerable. The sooner they can mitigate their vulnerabilities, the better. I'm looking forward to.
Well, I hope that you will be willing to advocate moving on beyond a voluntary regime, because the downside risk. 12 seconds. Quickly address the role of all of the Federal Reserve banks and your vision of what the role they should play.
So very quickly, I'll just say this. We should be good stewards of taxpayer money. We should be consolidating functions where we can. But my mental model, Senator, as I mentioned to you yesterday, is we should have 12 centers of excellence. I've got more than 12 problems on my plate. And if each reserve bank were to develop an expertise on something that matters to our remit and the American economy, I'd encourage them to develop that advantage.
Senator Ricketts.
Thank you, Mr. Chairman. Chairman Warsh, great to see you. Thank you for being here, and congratulations on your first semi-annual report. It's good to see you here again. We got some good news this week. Inflation was down, and that's progress under this administration and under your new leadership at the Fed. During the Biden administration, we saw reckless spending that drove prices up and left Nebraska families to foot the bill. In 2019, the federal deficit was roughly $900 billion, and by 2024, that was $1.9 trillion. And we saw inflation go up 20%, really stressing Nebraska families at the grocery store. Cleaning out this
I
mess
think
is
the
gonna
market
take
probably
discipline,
breaks.
and it's going to take reform.
I think the
Chairman
market
Warsh,
probably
we
breaks
discussed in our meeting
back into the
also how to
initial balance.
implement
It looks
some
like it's going to break that
reforms,
low.
such as process improvement. We talked specifically about Lean Six Sigma and the opportunity there. You promised to have a reform-oriented Federal Reserve, and we're willing to break up or make a break from some of the mistakes of the past. I commend you for that and want to work with you to see it through. One of the most important places to start is with the Fed's balance sheet, an issue I've consistently raised with other Fed governors. The Fed expanded its balance sheet dramatically during the pandemic, peaking at nearly $9 trillion. Since 2022, the Fed has shrunk it down to about $6.5 trillion in December 2025. And I'm glad to see that the Fed was making progress over the last few years, but the balance sheet is still not down to pre-COVID levels. Actually, the balance sheet is rising again and now stands at around $6.7 trillion today. Chairman Morris, do you see the balance sheet increasing again as a trend in the right direction or the wrong direction?
Senator, thank you for the question. I've been focused on the Fed's balance sheet, frankly, since my last day at the Fed some 15 years ago into the present. I don't want to prejudge the conclusions of this balance sheet task force, where, as the chairman said, I put together a team of rivals to fiddle with it, to evaluate it, to come up with their own judgments. But I'll give you my predilections. Monetary policy is made currently through at least two material instruments: interest rates and the balance sheet. In fact, we grew the balance sheet, created quantitative easing when I served the last time in the darkest days of the crisis, because we'd already cut rates to zero. So expanding the balance sheet had the intent of helping markets clear, but it was also another tool of monetary policy. I still believe that is true.
Wasn't that supposed to be temporary?
Indeed, that was our entry principle, was that we would get out of that business. The central bank has not, for a whole range of reasons, gotten out of that business. My general view is, as we think about inflation risks and we think about the conduct of monetary policy writ large, we have two instruments that we should be thinking about. The balance sheet is one of them. I'll make only one other point. Monetary policy needs to be architected, needs to be designed by the policymakers around the FOMC. The plumbing, the operations, how we do that is conducted by the New York Fed. I want the architecture to drive the plumbing, not the plumbing to drive the architecture. We're going to make a monetary policy decision with respect to the balance sheet. I'm very open-minded to changes, and any changes we make will be well discussed, well shared, and I think quite deliberate. And the financial markets, who have seen the balance sheet grow effectively for a generation, they'll have plenty of time to adjust if we make changes.
I know you said you just wanted to make that one comment, but I'm going to push you to ask for a little more. What do you believe is the smallest balance sheet that the Fed could operate with?
My predilection, my inclination is interest rate policy should be the driver of monetary policy. The balance sheet should be as small as practicable to conduct operations. And the balance sheet can expand when there's a crisis. The balance sheet can also expand if an institution needs liquidity. That's part of the reason why we've created a discount window. But a permanently large balance sheet with a duration of assets that are larger than the duration of assets of treasuries, for example, that are held in the broader public markets, boy, that sure seems a little bit more like fiscal policy that I'm comfortable with. So I would like us to have a leaner, meaner balance sheet, but it's a discussion for my colleagues, and I've got three real pros that are going to help us think it through.
Damn.
All right, well, I have run out of time, and I'm sure the chairman will be happy that I'm going to maybe get done
so this is what I'm
before
going to do
it reaches
here.
zero.
Thank you.
But I do have
I'm going to take one of
question
these
I'll follow up
contracts
with,
off.
for the record on scams, because this is something that the banking industry is
try to
something
get-
they're increasingly seeing, and it's costing
Or what
people
I'll
who,
probably do is
deposits a lot of money. So
I'll,
I'll follow up.
Senator, we're opposed to
probably
scams, but I'm happy to follow up.
readjust one.
Good to hear. Good to hear. This is great. Senator
Well-
Van Hollen.
Thank you, Mr. Chairman. And Mr. Chairman, we
No,
agree
I'll
on
leave
that
it where it's at.
point.
Man. I'll leave it where it's at.
Let me turn to the
I don't like the
headline
fact-
inflation numbers that came out.
I don't like that it,
yesterday at 3.5%.
Rejected again
above
at the
Fed's
initial balance low here.
2% target. Prices
Probably
are
should have
too
taken-
high
I
for
probably should have
families,
trailed
and
it a
we
little
need to get
bit.
them down. I think we can agree
Because
on
this thing
that.
could go down. I
At
mean,
your press
looks like we
conference
have
a few
another
weeks
trend
ago,
line.
You said that higher inflation, in part, and I quote, reflects supply shocks that have driven price increases in
So it
certain
looks like
sectors,
this
including energy,
space
unquote.
in
other
between
words,
this
the
trend
reason
line,
that
it was
we're
neutral
seeing
space.
prices go up is that the
But
supply of products,
price
and
trading outside
services
of these,
has dropped
outside
in
of the
some areas
space
of the economy,
empowers-
right?
Yes.
It will embolden the bears
And
to
I do think
aggressively
it's
begin to
important
sell.
that
So
the public
if the bulls can
understand
kind of get back into
the
the space right here,
causes of some of these supply shocks.
It can pop right back
You would
up.
agree,
I
would
feel
you
more
not, Mr.
comfortable,
Chairman, that
but
the war in Iran has caused a supply shock in the energy markets?
Yeah, the military conflicts have caused the price of oil to be higher than it otherwise would.
Absolutely right. And Americans are paying the burden of that as we go. We've also seen supply shocks in other areas. Last year, your colleague, Austin Goolsbee, president of the Chicago Fed, said that, and I quote, "A tariff is like a negative supply shock," unquote. And we've seen plenty of tariffs. Obviously, we have the Supreme Court decision that may bring those down over time, the impact of it. But the negative supply shocks have been real and can be traced to the Trump administration agenda. So when you say that supply shocks are part of the reason prices are going up, you would acknowledge that they're the result of decisions that have been made by the president, like going to war with Iran, right?
So what I'd say is particular price shocks happen to particular prices that we don't have control over, but I don't want to suggest we don't have control over inflation in the medium term. That's our job. But screwworm affects beef prices, other things that affect oil prices and milk prices, and I understand that has an effect on people's household budgets.
Indeed it does, and I think we've seen the price of energy go up by billions and billions of dollars, and the American people are essentially paid for that at the pump and other places in their pocketbooks. As you know, your predecessor as chairman was regularly harassed and berated by the President of the United States on social media with respect to interest rates. At least so far, you seem to have escaped that fate. But I do think it's important that we have an understanding of whether or not the president is trying to influence Fed conduct. I know you were asked recently at your last press conference about any communications with the president. I think your response was, "On the president, I don't have anything for you." Mr. Chairman, was that a yes or a no with respect to whether you've had communications with President Trump?
So I like what I said the first time. Senator, I don't have anything for you. I will say this, though. I do meet with the Treasury Secretary weekly. I talk to him often between that.
Mr.
And
Chairman, I just want to make sure
I'll make my own decisions as monetary policy.
I just want to understand the answer. Have you or have you not had communications with President Trump since you took this position?
I just don't want to be in the business of sharing discussions that the president and I have.
Okay.
I will tell you what I've said to the president repeatedly and said to the Treasury Secretary. They chose an independent guy to do an independent job, and that's exactly what I plan on doing.
Okay.
And I'd like to think over the last 7 weeks, given the decisions we've made and the things we've done, that it's not just words, it's actions now to start to demonstrate that.
So, Mr. Chairman, I mean, I think it's important. I take from your answer, you've had communications. You don't want to disclose the content. Will you commit to do what your predecessor did, which was to release your appointment schedule and conversations with President Trump?
I don't know what the past practice was. I will be in full compliance with the law. As I understand it, there's an ongoing FOIA request on my calendar, and I will share it consistent with the law.
Well,
I believe the first one's already come out.
I think this was this wasn't in response to any legal requirement forced by FOIA. It was a question of transparency, and I do think, given the president's past record of trying to influence Fed behavior via social media, with respect to your predecessor, if he's trying to influence Fed behavior through private conversations with you, I think that needs to be something the public is aware of. And I'm asking you whether you will commit to disclosing when you have conversations with the President of the United States.
Senator, I can offer you this assurance. The president has not, before I took this office, before I raised my right hand, he has not tried to influence the conduct of monetary policy. And if he tried to, I would continue to keep my head down and do the job. I don't have a long record, but I've got a 7-week record, and before that I had a 25-year record, and I think that should count for something.
I appreciate that. I hope you'll just follow the precedent, your predecessor.
Senator Kennedy, the floor is yours.
I mean, I don't know. If you're just going to get
Senator
a new guy that acts exactly how Powell did, then you should have just kept Powell in there. So that's why I don't necessarily believe that.
My Democratic friends.
I don't believe
about
that.
Transparency. You know,
I don't believe that.
Toward the end.
He doesn't necessarily
God bless
have
him,
to speak to Trump.
You could.
Everybody in power knows to
you
have a
could
proxy.
bake a Thanksgiving turkey in the
Everybody
time
knows
that it
to have a
took
proxy.
President Biden to walk across the stage. and they kept it quiet till they couldn't. I'm sorry he was in that condition.
He doesn't have to
but
speak to Trump, but
this
he can speak to
transparency
someone that
stuff
speaks for Trump.
cuts both ways. What's wrong with you talking to the President of the United States?
So, Senator, I've got a wide lens. I'm interested in hearing points of view from a whole range of people. We have a narrow remit. I'm interested in what's happening in the world, in the Middle
But I
East
mean,
and
is
elsewhere.
there anything wrong with it? Do you have to, when you do it, do you have to like go out and look for the last phone booth in Washington and put a bag over your head and sneak in there and call him? Or return his call? Is there anything wrong with that?
I certainly don't feel uncomfortable receiving a call from the chairman of this committee or the President of the United States.
Okay. You think Ben Bernanke ever talked to the President?
When I was a governor, I recall several conversations and
How
frequent
about Alan
meetings.
Greenspan?
When I was a young staffer in the White House, I remember being honored by him coming into the White House and meeting with the
I think
president.
we break
and the
above.
president's
I think we
advisors
break
quite
back
frequently.
into the initial balance range.
The
Bears have failed to
I
take
think
this lower.
What I would give me
The Bulls are
concern,
holding
and
it
I think it's
up.
the basis for
I
my
think we take
colleagues'
this back
concern,
in.
is that
I think we take it back
you
in.
just
yeah.
do whatever the president says, but you're not going to do that, are you, or are you?
Senator, I'm going to call it the best I see it. The president never asked me to do anything inappropriate, and if he did, I wouldn't do it. I'm going
Okay.
to follow the law and do my best to follow the remit you gave us.
Okay, so in the last year or so, recent past, I'll say, the Fed cut rates 3 times because they were worried about the labor market. Is that a fair assessment?
That's my sense of what
And
they did
it
before my
worked.
arrival.
It worked, correct?
Well, that's a longer discussion. They did
Well, is
cut
the
rates.
labor market in a mess today?
The labor market's in good shape, but
Yeah,
I wouldn't want
okay,
to draw
so
that causal connection.
So I don't have much time, Mr. Chairman. I love you like a taco, but I'm on. Yeah, you don't filibuster on me. So it worked. Okay. Now we have inflation. Okay. What caused it in 20 seconds?
In 20 seconds, inflation is caused when a one-time change in price is broadened out.
I know what inflation is.
And the
Mr.
Federal
Chairman.
and the
Tell me
Federal
what
Reserve
caused it.
monetary policy, sir.
Okay. Well, I would say what is causing it is AI. The conflict with Iran. Duh. And probably the
All right, there we go,
residual
baby.
effect of the fact
All
that
right.
some
Cool. All right, so we got
imports
the bulk
become
of this
more
position
expensive.
off.
Okay.
We got now our
And I
last
think
stop
any
in
fair-minded
profit
person
trailing it
would
as it goes
conclude
higher
that.
here.
There was a lot
All right,
of
man, this is going to be my
economists said,
last trade
you know, the
for
impact
this
of
session.
inflation on
I'm not even
rise
going
in
to trade
the
off
cost of
stream.
Imports would be a one-shot
I'm not
deal.
going to trade off stream.
You know,
Uh,
you can teach that one round or flat.
we took
I don't
a-
know. I
we
think
took-
it's probably had a residual effect.
Really great
Okay,
trades.
Is it temporary? Is it
today.
permanent? The inflation.
And this kind of
not gonna
reminds
be
me of
permanent
why
on
I
my
switched
watch,
to
okay, what are you going to do about it?
So we're
This is
gonna
why I
do
kinda
three
switched to,
things. One
a,
is for those people in markets that think the Fed really was comfortable with a higher level of inflation, we're doing our best to disabuse them. of
Okay, you're going to talk.
I went
about
to
it.
a
What's the
one
second
trade a
thing you're
day
gonna
type
do?
of style
We're going
where
to take ownership of it. We're
I
gonna
just
say
go
we
for
have
a
the
Hail
power
Mary
to do
trade per
something.
se.
You're going to own it.
That's
What's
right.
the third
because
thing you're going to do?
I took about
We're
3 or
gonna
4
look at our
trades, or I took
tools
more
in the
trades than that.
changing economy, both balance sheet and interest rate, and see whether we need to adjust policy to take it head on.
You're going to look at your tools. That's the third thing. I'm not asking you what action the Fed's going to take. That would be improper, Mr. Chairman. I wouldn't do that, and you wouldn't tell me anyway. Give specifically, like you're talking to a 10th grader, okay? Not. What are your options? Leave it alone, right? Leave rates alone. This is one option.
That is an option, Senator.
Raise rates.
Another option.
Cut rates.
A third option, a non-exclusive list of options, but yes.
Well, and a lot of it depends on whether it's temporary or permanent. So how do you decide whether it's temporary or permanent? I got that in
All right,
with
well,
6 seconds
all right.
left.
We made about 2K today.
You
That
used
was
5
that
task
was a great
forces
run
to
of
get to the
trades.
Big and hard questions
we took
instead of trying to paper it over with
really great
policies that have
trades
not
today.
been proven as successful.
Senator Cortez Masto.
Thank you, Mr. Chairman. Chairman Morse, good to see you again. Thank you for meeting with me.
Thank you.
You've talked about the task forces. What's the timeline for getting reports from the task forces?
So I'm not a very patient person. People have said that to do all this good work, you'll need years. I gave them 6 months.
Wonderful. Thank you. And that will be made public?
Yeah, the details, even much of the deliberations, I want to do that in the public square because we all own these decisions at the end of the day. Ultimately, decisions will be made by my FOMC colleagues. I think they'll start to get briefings on some of the early reports from the task force, early indications, hopefully as early as September, with my expectation, hope by year end, we're going to hear their conclusions and decide what to do with it.
Thank you. And then just for clarification, in January of 2025, do you recall the inflation rate? It was about 3%, correct?
I'm going to have to take your word for the precise number, but I knew inflation was still well above target.
Yeah, it was about 3%, and that's when Joe Biden left office. And the current inflation rate right now is about 3.5%, is that correct?
There are various measures. I'm confident in telling you it's been above target for 63 months. It's
is it
not where
above
we want it to be.
3%?
By some measures, by other measures, it's not. But I don't want to suggest I'm happy with any of those measures. I'm not.
Okay, I appreciate it. Let me talk a little bit about an area that is important for me, and I think many states that deal with a hospitality tourism industry. Unfortunately, under this administration, we've seen significant declines in the number of international visitors to the U.S. The current situation has actually led to our travel trade deficit in this country going from a $51 billion surplus in 2019 to a $72 billion deficit today. How does the Federal Reserve governors consider the specific impact of higher unemployment, lower wages, and reduced economic activities in communities with large tourism economies like Las Vegas?
So we are consumers of this information. We are keenly interested in the goods side of the economy and the services side of the economy. My view, which is not universally shared in the economics profession, is that there's no limit to what this economy can grow. Productivity-led growth can move higher, and that doesn't tell me it's inflationary. But we care about the services part of the economy, and we're trying to take that into account when we try to make decisions about the dual mandate.
Well, I appreciate that because you're right. Your dual mandate is maintain stable prices and full employment. Let me tell you what's happening in the hospitality industry because of the policies of this administration. When you talk about full employment, it is not happening. What I am hearing from people in my state is that it's not necessarily full employment with good wages and livable wages. They're patching together multiple low-wage jobs because they are taking down from full employment to part-time employment. Do you consider that in your analysis, going from full-time employment to part-time and many individuals having several part-time jobs? How do you calculate that into your analysis?
So we think hard about it. You heard in my opening statement the clear judgment of my colleagues and me, which is the labor market broadly looks in balance, but I don't want to make that sound like it's easy for hardworking Americans in your state and other places. There's a lot of dynamism happening in the economy. There's a lot of structural change, and during periods of transition, it's often true that the labor markets in aggregate look better than people feel in different parts. And during disruption, they try to recreate a job they had before through the gig economy and other means. We take it into account. Overall, I would say the labor market part of our mandate looks pretty good. The price stability part of our mandate looks less good.
All right, and I am concerned because not just Las Vegas, but many tourism-based industries and hospitality, what we're seeing is lower full employment. And I would hope, and this is a conversation I've had with previous chairs as well, I would hope that you're considering that. It is a large sector of employment across the country. And I know you made a statement that rise in prices is not necessarily inflationary, correct? At what point do you consider it to be inflationary? Is there a timeline associated with that?
So when an increase in prices in a particular category like oil or like milk or eggs, when we see that broaden out and affect the generalized price level, that's something we can do something about. That's the way I think of inflation. When prices go up, I know it hits your constituents every day. I'm not trying to sound dismissive of it, but I also don't want to say that there's much that we can do about cattle prices or milk prices today. But there's a lot we can do to make sure that the entire grocery aisle doesn't have higher prices, and that's what we're committed to do.
Thank you.
Senator Hagerty.
Thank you, Mr. Chairman.
That was a nice run underneath these
Chairman
lows.
Morris, on July 18th, almost a year ago today, President Trump signed my legislation, the Genius Act, into law. A thorough rulemaking process is absolutely vital to ensure that U.S. dollar dominance exists here in the digital age. And I look forward to seeing the Federal Reserve's ongoing work in this matter. I just want to make that point clear. It's important, it needs to be done, and very much appreciate the Fed's attention to it. I want to turn now, though, to a broader concern, and that has to do with the independence of monetary policy. You've had a number of conversations with my colleagues about this. I want to emphasize something that I think is quite important. The special insulation that the Fed receives with regard to monetary policy, I think as far as I'm concerned, it shouldn't extend to every other function of what the Fed does. I think it should be limited to monetary policy. For example, you think about bank regulations and supervision. That's entirely distinct from monetary policy. Regulation requires normative policy judgments about capital, about credit availability, about risk, economic growth, the structure of the banking system. All of these considerations need to roll into it. And you think about what's happened in recent years, regulation has even strayed far afield. You think about what's happened with respect to climate policy, or Michael Barr's failed Basel III proposal. These decisions are not the same as setting interest rates or managing the Fed's balance sheet. And quite simply, I think they're forms of executive regulatory power. The Supreme Court has clarified, for example, that the FDIC is subject to ordinary principles of executive accountability. Comparable regulatory functions at the Fed shouldn't be held to a different standard, in my view, simply because they sit within the central bank. So my question is this, Mr. Chairman, do you agree that the Federal Reserve's independence should be narrowly tied to its monetary mandate?
Senator, thank you for the question. Like you said, independence is at its peak in the conduct of monetary policy. I believe that when I showed up at the Fed in 2006. I believed at my confirmation hearing 7 or 8 weeks ago. I believe it now. In the conduct of bank and regulatory policy on things like the Genius Act, my general view is we should be working with our bank regulators, the other bank regulators, the OCC and the FDIC, see if we can't put out our rules together. What I don't think we want is any kind of regulatory arbitrage where firms are trying to game who's got the lightest regulation and race there. I don't think there's anything wrong with us working together with other bank regulators to try to figure out what's the best policy. I've got some extraordinary colleagues at the Fed. They've been able to think hard about these issues. I think those discussions should happen and do happen.
I don't disagree at all with that, and I like your approach in terms of coordination, but there's something deeper that I'm concerned about, Mr. Chairman, and that is, and just make an example, let's suppose a future Congress decides to embed some sort of regulatory function inside the Fed, seeking to insulate it from our supervision, from our oversight. In some way, that could become a backdoor that I don't think any of us want to see. And what I'm trying to make clear is that beyond monetary policy, I'll ask you the question. Do you think that this special insulation applies to other regulatory and supervisory types of functions?
Make this shit up, bro.
So I spent 8 weeks as a summer associate at a law firm, so I'm probably not best positioned to opine on the Supreme Court. Senator Warren could do a better job than I. I do recall in the most recent opinion a footnote from the majority that says we are not suggesting that if other things went to the Federal Reserve, it would get any insulation. Beyond that, I'm on shaky ground in trying to opine on what the Supreme Court opinion means prospectively.
Yeah, I wasn't looking for your legal opinion, but I do just think as a matter of common sense, I wanted to get that on the record, that there is a real distinction here, and I appreciate that. I'm going to turn to another important matter, and that's the monetary policy report that you work with. The most recent monetary policy report added a new aggregate to the measurements, the M2 aggregate. And I just wanted to ask you to explain why this metric is useful and why it's been added.
Thank you, Senator. That was an Easter egg that we hid in there to see if anyone read these monetary policy reports. So I'm encouraged that you did. There is almost a page talking about M2 and monetary aggregates. That was done with a purpose. I do not show up here as a monetarist. I do not show up and say the secret to inflation is if we only knew M2, everything would be swell. But monetary aggregates had been taken out of the monetary policy report probably about a decade ago, maybe a bit longer. My view is that a modern central banker should have a mosaic of information and should not be allergic to any data that happens to be inconsistent with dogma that he or she might have been taught in Econ 1. I have this old-fashioned view that monetary policy has something to do with money. I remember an old professor of mine that said, who was a proper Keynesian economist, he said, well, I don't understand how to think about inflation in a place like Zimbabwe without talking about money. So I think money matters. What we witnessed when we looked at some of the monetary aggregates is they are not perfect. We don't measure money very well. We don't measure the velocity of money very well, but it's a pretty good cross-check. And had we seen the surge and paid attention to the surge in inflation and money in 21-22, we might have seen this problem sooner. I apologize, Mr.
Senator Smith.
Thank you, Mr. Chair and Ranking Member. Chair Warsh, welcome to the committee. So you may know that Minnesota Senator Hubert Humphrey, who's once held the seat that I now occupy for Minnesota, led the charge in Congress to include maximum employment as part of the Fed's dual mandate. And we can probably agree that keeping these two goals of maximum employment and stable prices within the confines of the monetary policy power that the Fed wields, that just makes sense. Because it's a strategy that delivers stable prices, a strategy that delivers stable prices while working people can't find jobs or can't afford their lives. I mean, that's not a healthy economy. I expect you to agree with that.
And I do, thank you.
So I was very interested in the task forces that you established last month to advise you on reform and modernization. And I want to just ask you about one of them in particular. You've created a task force looking at productivity and jobs, and that's really good, it seems to me. This task force should be able to get at the power of the Fed's dual mandate and ask also some of the big questions that everyone is asking about the power, the impact of AI on wages and people's income and employment. So let me just ask about this particular task force on productivity and jobs. So as I understand it, it is led by three people, venture capitalist and investor Mark Andreessen, who's made billions from AI and is a major Trump donor, another tech executive who recently laid off thousands of people, and then an academic economist from my alma mater, Stanford University, who is currently on leave to do research at Anthropic. So I want to ask about this. Is there anyone on the task force who has experience in the labor market, or somebody who can bring the perspective of an employer rather than an investor to the questions that are going to be asked and hopefully answered by this task force?
So if I could say two things. One is those three people you referenced are three of the smartest people that I know. And I've been...
And I'm not disputing that. I'm wondering how you intend to bring into this work the perspective of people who are working people, bring in the perspective of labor and not just investors.
I think it's a fair question. I've got 18 colleagues who are going to join me and consume the deliberations they have in the report. And we're the ones that have the dual mandate. And as I said to your colleague, there is no disfavored part of our mandate, and we're awfully focused on full employment. So that's my commitment to you. We haven't outsourced this decision to three people. What we've outsourced to is a bunch of thinking about this massive technology shock. And I'll only note one other thing. Chad Jones, that professor that you mentioned, his academic work, he's an academic, I'll admit that. But
I'm not opposed to that. I'm just trying to figure out.
But his academic work has been very, very focused on what is the effect of the labor markets of these technology shocks, both the good and the bad. And I think that history he can bring to bear to the work of the task force.
So can you understand why a task force that is led by people in large part who are likely to get richer by AI might not be the most credible people to folks on the ground who are doing the work, who are worried about what impact this AI is going to have on their jobs. And there's the concern, of course, is that the productivity that is expected to be delivered by AI, if that actually happens, that the benefits of that productivity are going to accrue to capital and not to labor. And that, it seems to me, the credibility of this task force rests on hearing the perspective of working folks in their deliberations.
I would expect before they come to their conclusions, they are going to hear from folks that will be affected. They are going to hear from employers that are getting struck with this technology shock and have disruption in their labor force. But I don't want to suggest to you that in any of these task forces that we have the 19 people of all different backgrounds. But what I want to tell you is if you think they have a credibility deficit, I don't. I think they're incredibly talented. And we will make sure to take both parts of our dual mandate in consideration of their output.
I think the issue, sir, is that when there are the big guys sitting at the table, is there anybody sitting at the table who's bringing the perspective of working people to those really important questions? There are labor leaders, there are labor economists, they are folks whose expertise is in issues around wage stagnation and how that impacts working people. And I would ask you to consider bringing that perspective, not to be heard on the side, but to be actually at the table with the big guys. I think that is a credibility issue that you could address very easily. Thank you, Mr. Chair.
Thank you, Senator.
Senator Tillis.
Good morning.
Good morning.
I think you're doing a great job today. I appreciate your composure. Mr. Warsh, a quick question on just immigration. You know, some people are proudly discussing how we had almost net zero immigration in the last quarter, but we're starting to look a little bit like China, Japan, European countries in terms of our replacement rate, in terms of natural replacement rate. So if net immigration were to remain near zero for an extended period, how would that change your estimates on GDP, the neutral interest rate, and the amount of non-inflationary job growth the economy can sustain? And in some ways, it touches on, I think, Senator Cortez Masto's question, too, about jobs unfilled, but just curious.
Thank you, I think the initial balance low.
A softball
I think
there.
the market breaks back into it.
The way I think about it is immigration policy is set by you and the administration, but we are...
Yeah, I mean, I don't want you to talk about policy. What I'm trying to do is communicate to the American people, we can make the mistake of Western Europe, Japan, and other industrialized nations, or we can fix this population growth problem. If we don't, these are policies, then how does that make your job more difficult if we were to sustain the current trajectory?
The way those decisions affect us is it affects potential GDP. The biggest, hardest decision we make is what can this economy produce? How fast can we grow? Potential GDP is a function of two things. How many hours are we working? People in this country working.
But just in a word, because I want to ask a few other questions.
And then second, productivity.
Yeah. At the end of the day,
if the worker hours are constant, we need a productivity boom.
Just a real quick question. Would you be thrilled to know that we could guarantee zero net growth for the next decade because that would make your job easier?
We're going to take the number of hours the American people and your policies produce, and we're going to do it the best we can.
We got a problem. You can't fix it. But what I'm saying is if we're trying to make your job easier, having this on the agenda is not going to make your job easier. And I understand the position you have to take, but I want to point to something that people are high-fiving and talking about net zero immigration growth as if it's a good thing. It's only a good thing if you want to repeat the mistakes of Western Europe, Japan, China, and other nations that didn't get their replacement rate right. You know, bringing in great people that may have been born in Colombia and aspired to become a senator, for example, those sorts of things. I mean, didn't get it right every time, but no. Mr. Warsh, I told you also, and just for the American people, do you have a magic wand where you can just walk in and convince 7 people of the FOMC to vote exactly the way you want them to?
Perhaps I wish I do, but I do not have such a wand.
So you are one of a body where you have to gain consensus to make an interest rate move, right? Monetary policy move, right?
Yes, and it's a consensus-led organization.
And based on some of the comments from even Governor Waller, who we'd consider to be, pretty hawkish just this week, he's not guaranteeing that we're going to be able to lower interest rates anytime soon based on data-driven decisions. Did that just occur this week in a speech, I think, up in New York?
There are a diversity of views. I wouldn't want to dwell on any one of them in particular.
No, it's okay. But what I'm trying to explain to people who think the president can give you a call, you make a decision, it happens, that never happens. Wouldn't have happened under Powell, wouldn't happen under you, wouldn't happen under anybody who's responsible chairman. I just wanted to make that point. The last thing, if you could just
Okay.
tell me, I know you don't want to get in.
All right, guys. I'm out of time for this session. Like I said, we had some great trades. The one thing about great trades, taking multiple great trades, is that they're mentally exhausting. Right now, I'm mentally exhausted at this point, but I am proud of what we achieved on this stream this morning. Being patient, looking for setups, drawing our trend lines, taking into account chart geometry and things of that nature. So I'm pretty proud of that. But with that said, I do appreciate everybody that joined me this morning. We'll definitely come back later on tonight, and we'll definitely look for more opportunities to earn some more money. And with that said, peace out, everybody, and keep on jabbing.